There may be a form at your county office that lowers or even eliminates the property tax bill on your home. For disabled veterans and some surviving spouses, that form can be worth thousands of dollars every year. But there is no single national VA property tax exemption. VA does not control your county tax bill. States write the rules. Counties administer the applications. A 100% rating can mean a full exemption in one state, a partial exemption in another, and no special result unless the veteran also meets residency, income, wartime service, or permanent and total requirements. That is why copying a neighbor's answer is dangerous. The valuable skill is knowing which application to request and which words in your VA letter the county needs to see. I am going to give you 8 application categories. Your county may combine several on one form or use different names. Ask about the function, not only the title. Form number 1 is the basic homestead application. This establishes that the property is your primary residence. It may reduce taxable value by itself. More importantly, many veteran, disability, senior, and surviving spouse benefits cannot attach until homestead status is established. Ask the assessor, is the homestead exemption active on this parcel in my name? Do not ask, do I get a discount? A clerk can answer the first question by checking the record. Form number 2 is the Disabled Veteran Property Tax Exemption. Some states scale the benefit by rating. Some reserve the largest exemption for veterans rated 100% or permanent and total. Some include veterans receiving specially adapted housing assistance. The letter matters because 100%, permanent and total, and individual unemployability are not interchangeable phrases in every state statute. Bring the VA benefit summary letter, proof of discharge if requested, identification, proof of residence, and the deed or tax parcel number. Ask whether the county requires a new letter every year. Picture 2 veterans who both receive compensation at the 100% rate. One has a scheduler 100% rating marked permanent and total. The other is paid at the 100% rate through individual unemployability, but the local statute uses different eligibility language. Their deposits can be the same while the county result is different. Do not let a clerk guess from the payment amount. Give the exact VA letter and ask the assessor to identify the controlling state or local rule. If the benefit letter contains information the county does not need, download a current letter through va.gov and choose the appropriate fields when possible. The tax office usually needs proof of status, not the veteran's entire medical history. Dear friends, you no longer need to watch 1,000 videos trying to locate benefits that fit your life. At abundantyears.com, we organize a personal list of 18 to 28 benefits based on your state, age, and situation. You can also find free checklists and request a private one-on-one conversation. We have gathered the starting points for you. Visit abundantyears.com or use the link in the description. Form number 3 is a partial rating veteran exemption. Do not assume property tax help begins only at 100%. Several states offer a fixed deduction, percentage reduction, or income-based credit at lower service-connected ratings. The dollar value may look modest on the form, but a recurring reduction compounds for every year you remain in the home. If an exemption saves $700 this year and the homeowner remains eligible for 10 years, that is $7,000 before considering future tax changes. It is not a market return, and it is not guaranteed forever. It is a recurring expense removed from the household budget. That is why a small-looking exemption deserves the same attention as a larger one-time refund. Ask whether the benefit applies only to the veteran's share of ownership. A home held with another person, a trust, life estate, or recently changed deed can be treated differently under local law. Resolve ownership before the deadline instead of learning about it in the denial letter. Ask, does this jurisdiction offer any veteran exemption below 100%? And does the amount change at 10, 30, 50, 70, or 90%? Then ask whether separate city, county, school, or special district taxes follow the same rule. Form number 4 is the ordinary disability or senior homestead exemption. A veteran may qualify through more than one door. If the veteran exemption is narrow, an age-based or general disability exemption may still help. Some programs have income limits, others do not. Some stack with a veteran exemption. Others require the homeowner to choose the larger benefit. Never file 2 applications assuming the assessor will optimize them for you. Ask for a written comparison of what can stack and what cannot. Make the stacking question specific. Can the disabled veteran exemption stack with the ordinary homestead? Does the senior benefit replace the disability benefit? Does a city exemption apply when the county exemption does not? Are school taxes treated separately? One tax bill may contain several taxing authorities, and one exemption may not touch every line. This explains why "my friend pays 0" proves almost nothing. The friend may live inside a different school district, have a different rating designation, own the property differently, or have filed before a rule changed. Compare statutes and parcel records, not stories at the diner. Form number 5 is the tax ceiling, assessment freeze, or circuit breaker application. These are different mechanisms, but they attack the same problem: a tax bill rising faster than household income. A ceiling may limit a specific portion of the bill. A freeze may hold assessed value or a base year amount under stated conditions. A circuit breaker may refund part of the bill when property tax consumes too much household income. The veteran status may not be the qualifying fact. Age, disability, income, or residency may be. That still makes it part of the veteran household's financial plan. Form number 6 is the surviving spouse continuation application. This is the form families discover after the bill jumps. In many states, an exemption does not simply remain because the surviving spouse still lives in the same home. The spouse may need to reapply, meet an age requirement, remain unmarried, maintain the property as the primary residence, or show that the veteran's death or disability fits the statute. If a veteran with a property tax exemption dies, call the assessor before the next billing cycle. Ask whether the benefit transfers, the deadline, and whether the spouse must file under a different section. The spouse should ask 4 questions in writing. Must the spouse remain unmarried? Must the home stay the primary residence? Is there a minimum age? Can the benefit move to a replacement home? These rules vary sharply. A surviving spouse may preserve a valuable exemption, but lose it through a move or missed filing that appeared harmless. Keep the marriage certificate, death certificate deed, VA decision or DIC letter, and prior tax exemption approval together. Grief is the worst time to reconstruct a paper trail. A prepared folder turns a frightening tax increase into a defined administrative task. Form number 7 is the property tax deferral. A deferral is not forgiveness. It postpones the bill. The unpaid tax may become a lien against the property, accrue interest, and become due after a sale, transfer, refinancing, or death. For a veteran who is house rich and cash poor, a deferral may preserve monthly cash flow. For heirs expecting a debt-free home, it may create a surprise. Request the interest rate, lien priority, repayment trigger, and annual renewal rule in writing before signing. Form number 8 is the valuation, protest, or appeal. An exemption changes how the tax is calculated. An appeal challenges the value or classification being used in that calculation. The veteran may qualify for both. Review the property description before arguing about market value. wrong square footage, an extra bathroom, a finished basement that does not exist, or a condition adjustment the assessor missed can inflate the bill. Then collect comparable sales, photographs, repair estimates, and the filing deadline printed on the assessment notice. The deadline may be short. An exemption deadline and an appraisal appeal deadline may also be two different dates. If the county valued the home correctly but failed to apply the veteran exemption, challenge the exemption decision. If the exemption is correct but the county overstated the property, challenge the appraisal. If both are wrong, preserve both appeal paths. Sending comparable sales to an exemption clerk will not prove eligibility. Sending a VA letter to an appraisal board will not prove the house is overvalued. Take photographs of deferred maintenance, structural damage, or conditions that make the property inferior to the county's comparison homes. Use closed sales when the local procedure calls for them. Keep the packet short enough that a reviewer can see the error quickly. Use this 5-call script. First, call the county assessor or appraisal district. Say, "I am a veteran homeowner. Please list every homestead, disabled veteran, senior, disability, freeze, deferral, and surviving spouse program that can apply to this parcel." Second, ask which programs stack. Third, ask for the exact deadline and whether late filing or retroactive relief exists. Fourth, ask for the required VA letter and whether it must show a percentage, permanent and total status, effective date, or service-connected death. Fifth, ask for the denial and appeal procedure before you file. Knowing the appeal window prevents a rejection letter from sitting unopened until the deadline passes. Now check the escrow account. When an exemption is approved, the county may lower the tax bill, but the mortgage servicer may not immediately lower the monthly payment. The servicer generally needs the corrected tax information and may perform a new escrow analysis. A county approval and a smaller mortgage draft are two separate steps. Send the corrected tax notice to the servicer through a traceable channel. Ask when the next escrow analysis will occur and whether an off-cycle review is available. Then compare the old annual tax figure with the figure in the new escrow statement. The exemption has not reached the household budget until the servicer is collecting from the correct bill. If the escrow account already accumulated too much, ask how the surplus will be handled. Do not assume the next payment will fall immediately or that a refund will arrive on the county's schedule. The county and mortgage company are separate systems. Also check the effective date. Some states allow a benefit for the current year. Some apply it the following year. Some permit limited refunds. Never promise yourself a retroactive check until the assessor confirms the statute and tax years involved. If the first application is denied, request the reason in writing. Was the problem the rating language, residency date, ownership record, deadline, missing signature, or a rule that truly excludes you? Correctable paperwork and legal ineligibility are not the same thing. Then use the appeal path printed on the notice. Bring the statute or county instruction, the denial, and the missing proof. If the dispute is significant, contact an accredited veterans representative for the VA document issue and a qualified local property tax professional or legal aid office for the state tax issue. They solve different parts of the problem. Here is the final audit. Verify the homestead. Verify the veteran exemption at your exact rating. Check ordinary age and disability programs. Protect the surviving spouse. Read any deferral as a loan. Protest an incorrect value. Then confirm the corrected bill reached the mortgage servicer. The county cannot apply a form it never received. Your VA rating may create the doorway, but the local application is what turns that doorway into a lower bill.